Hello, chart watchers and Decision Point faithful. Welcome to this January 10th, 2022 episode of Decision Point. My name is Erin Swenlin of DecisionPoint.com, and I'm here with my father, Carl Swenlin. Let me go ahead and introduce you in. How's everything going for you, Dad?
Oh, pretty good.
Yeah, market is doing pretty much what we've been expecting it to do. I'm curious to see what some of our indicators are going to say after the close later when they go final.
Yeah, I think we had we would have had a climax day today, except we had a reversal instead.
Mm-hmm.
So, yeah, interesting.
Yeah, definitely. I'll be letting everybody know in our Decision Point alert tonight what that climax or non-climax turns out to be. So all of our subscribers can get ready for that. Let's go ahead and talk about what we're going to cover today in the show. Trading environment has changed over the years. We have Carl here with all of his experience of many years watching the market. And so I'm really interested. He gave me this subject that he's going to cover today. So I'm very curious what you have in mind to talk about there. And then we're going to look at 6 of what we call the S&P 10, the top 10 market capitalization, market cap stocks, and note the fact that 6 out of 10 are in bear markets, and we'll show you that. We're going to cover, as usual, our market overview and indicators, and then I'm going to finish with 2 diamonds of the week. So I think they're going to be interesting possible short-term trades, but as your first bullet talks about, the trading environment has changed over the years, and our trading environment currently has me at least only about 15% exposed to the market. So be very careful with your portfolios right now. It's weak and getting volatile. All right, with that, I'm going to pass it to you, Dad, to go ahead and tell us a little bit about what you think the trading environment looks like and how it's changed.
Okay. First of all, yeah, I've been wondering about the volatility we've seen. You know, going back to the 2020 bear market, it was just insane, and it's still very touchy. And reflecting upon it, I thought about how much things have changed since I entered the market in the early 80s, and I've been at it for 40 years. And when I started, there was one discount broker, that was Schwab, but mainly people were using so-called full service brokers, which was full service commission. It was quite substantial to make a trade. It cost a lot. You couldn't do it, regularly, certainly with a small portfolio. And of course, you placed your orders on the telephone. You had to get a hold of the broker, and it just was a ton of friction in the investment process. And in the 1990s, we've got discount brokers abounded in the early 90s. And I say, quote unquote, everyone became involved with the stock market. So it became democratized. Just everybody was involved and could do it. And as of today, they've gotten rid of the commissions entirely, and there's just virtually no friction involved. People can make up their minds to sell something 1 minute and say, "Oh, I shouldn't have done it," and go back and buy it back. I mean, it's that quick. And you can do. It's just amazing. You go on and you click the button execute, and it's executed before you can, move your hand to the next key.
Mm-hmm.
It's very fast. So that's the kind of thing we got to look at nowadays.
Lots of new retail investors, as we like to call them.
Right. And then notice that today we had this, we were way down today. It was down about 2% The S&P was down about 2%. And it was amazing that it turned around and started back up. We'll get into that a little bit, but I wanted to get involved, look at the S&P 10. These are the 10 most, the 10 highest cap stocks in the S&P 500, beginning with Apple. Let me make sure I've got the most recent price on that.
Mhm.
Okay, so it was down, it hit that support line and bounced back up. So perhaps we're done with the selling, or perhaps we're going to do another top and maybe get a triple top out of this, or head and shoulders, exaggerated. But notice it's down 8.5%. It has gone down 8.5%. That is just a pullback.
Yeah, that double top too. I was looking at that Apple chart in the trading room, and the double top on there just, I mean, it's holding that 50-day and that confirmation line for that double top, but boy, those indicators are pretty ugly.
Yeah, and I really meant to do this too. Let's see, and not that I want to see the monthly. The monthly, this is talk about parabolic, and this will not prevail. I assure you, it will not prevail. Don't know when it's going to break, but it's going to have a substantial pullback. But I won't get into that any longer for now. Here's Adobe. It's gone down. That's 29%. From 0 to up to 10% down is a pullback. 10 to 20 is a correction, and above 20, it's a bear market. So this stock is in a bear market, and it has been for about a month. Amazon, substantial correction. It did put in looks like a hammer if it was a candlestick chart, but looks like, again, this looks like we did possibly hit a bottom today. Facebook, same kind of deal. It's in a bear market. I mean, it hit a low over here in December. It did a rising trend, and that trend has been broken. So my assumption is, and people are welcome to be more optimistic, but my assumption is at this point that it's still in a bear market. Google, correction. MasterCard, one of the few non-tech stocks in this, one of the two actually non-tech stocks in this 10. Again, it's hit a bottom. It's in a bear market. It hit a low here in December, rising trend, and that trend has been broken.
It's a giant megaphone too. Starting from the end of September, rising tops, and then those.
Bottoms. I see that now. Yeah,
that's ugly.
Microsoft, it's a correction, and it did find support today on this rising trend line. Netflix, a real mess. It's definitely in a bear market and hit a bear market low today. Again, looking bouncy here. NVIDIA, bear market. Tesla, it's not one of the 10. I have it in here so I get to look at it, right?
Like everybody.
Again, it's in a bear market as well. And then finally, Visa. Again, we had a low in December, a rising trend, and it's been broken. So to recap that, we've got 6 stocks that are bear markets, and 3 that are in corrections, and 1, which is Apple, in a pullback.
So the question I know that's on everybody's minds here is, you were talking about some of these levels look like we could get a bounce off of these levels. And I had a lot of people in the trading room this morning asking about stocks that, were hitting like their 50-day EMAs and hitting some support levels, but the indicators are just so negative. So, I mean, are you looking for a bounce on some of these?
Well, like, look at Visa here, the way this, we had the day, and it basically recovered most of the loss today. I shouldn't say that because it was actually dropping from here. But this looks like we're going to get a bounce. Maybe a 1 or 2 day bounce, or it could be that we're on our way. That's possible, up again. But no, I'm looking. I mean, I am certainly expecting a bounce when I see the kind of activity we had today, kind of action, because it was really pretty nasty looking for there a while.
Yes.
Something on another subject that was not on the agenda, but it looks like I have plenty of time to cover it. I read somebody's recommendation for eBay today, and it was a fundamental analyst, and he had all the good things to say about it fundamentally. And I look at the eBay chart. Well, PE here is 3.5. I mean, that's hugely undervalued at this point. 10 being the undervalued level, normal undervalued level. This is at 3, just as at 3.5. So fundamentally, in that regard, earnings 18.21, and it's only paying out a 72-cent dividend. We've got the dividend is consistent here. We don't see any problems. But the problem technically, and this is why you have charts, is that it's in a bear market right now, and the way it reacted today, I don't think that's over. And just look at the weekly chart. It recovered really nicely from the bear market in 2020, but I wouldn't be. I mean, I don't see any technical reason to be getting into it right now, but fundamentally, it looks great. But
right.
The market is terrible in terms of being overbought, the broad market. Okay, I should be getting on to the recapping today. I see we had climactic levels of volume. I think that's the only thing that we do have, but we'll get a look at that in a minute. Still within the rising trend channel. And I was thinking we'd make it all the way down here because you have double support, rising trend line plus horizontal support. Advanced decline lines. Well, you have the negative divergence on volume. Volume is not so healthy in any way that we look at it in term, or the longer term. New highs and new lows today. Contracting. Well, yeah, new highs contracted, and we got some.
We're seeing new lows. We haven't seen those much.
The Silver Cross Index. We have. Let's see, S&P 400 stayed level, as well as 500, and there was improvement on the Silver Cross for this S&P 600. What I really should have been looking at is the Silver Cross for
yes,
the broad
the
indexes. Yeah, now the NASDAQ is, I've got something in my way here. Okay, the NASDAQ is It ticked up today actually, but it's 34%, which is pretty sad for
Yeah.
market that's just coming off its high. The New York Stock Exchange Composite ticked down a little bit, and it's at almost a little more than half of the stocks are just a little more than half are on Silver Cross. Let's take a look at the climax today. All we got on climax was volume, total volume. You can see the ratios are not up-down ratio are not going to be strong at all. We've got red bars on net advanced declines and net AD volume. Notice that we hit the lower band on the VIX.
Yeah, and typically, we look for those punctures because they tend to come right before reversals, not necessarily longer term reversals, but certainly those stretched out moves like we're seeing right now. It's kind of hammer-like too, today's candle.
Yeah.
So, the only issue I see, at least with the VIX, is those bands have been squeezing together. And, what is a puncture of the lower band right now is nowhere near the punctures we had in December. So I'm taking it with a grain of salt, but certainly a big day like today to the downside, I could see a bounce or 2 days of.
Right. And our short-term indicators, not very oversold today, not very oversold at all. This one, the big problem here, you see that the percent PMOs rising, percent stocks above their 20. It was dropping off before the top.
Mm-hmm. And what I've been telling people too is when you look at the percent, percent stocks above their 20 and momentum rising, I mean, they are pulling back, but those are not oversold. Our STOs really aren't oversold. I mean, there's certainly more downside that could be accommodated here.
Right. Silver Cross, we looked at that. Golden Cross, it is rising.
Mm-hmm.
And I don't see any problems other than the fact it's bleeding off. It's still not at a low level that you would be concerned. The ITBM these are intermediate term indicators. They're dropping off a bit, but they're basically at overbought levels. Okay, moving on to Bitcoin. It had some heavy selling today, but it, again, like many things, it recovered and possibly is going to bounce for us.
Yeah, I don't know. My nephew, your grandson Devin, sent me a text that he bought $5 worth of Bitcoin, and he was wondering what was going to happen. I told him it doesn't look great right now, but at least you didn't buy at the top.
And you should have said, well, you should have asked me that before you bought it.
I know exactly.
Okay. Okay, the dollar not doing very much today, which is good for gold. Gold was up modestly but nicely today, bouncing off of this level support.
Yeah, still holding that PMO buy signal, barely.
Yeah, it sure is, just barely. Okay, gold miners.
I don't see anything there that would get me into a gold miner.
It's oversold. That's all you could say, and it's trying to bounce. It looks like, but. oil, it's got a rather sharp rising wedge, which it broke down from today. And the Treasury bonds had hit a low for this decline and bounced up somewhat, but this is still a down channel here. And with that, I think I'll turn it back to you.
All right. Thank you for pretty much taking the lead for most of today's show. That was nice. All right, so we're going to go into the diamonds of the week. I ran my scan, my diamond PMO scan, and I got 0 results today. I usually will see a couple on a bad day, but I don't usually see 0 results from that particular scan. So that tells me a lot. So I ran a PMO crossover scan and I managed to find 10 stocks that came up on that. And of course, they don't all look good, but I did find 2 that I thought were interesting that you can look at. First is a consumer staple, Albertsons Companies, they're a food retailer. And you can see that, we're starting to see that shift into the high yield type stocks, consumer staples, real estate. And so when I saw this one come up, I was really curious and I love the way it's broken out. It's back now above its 50-day EMA and RSI has just turned positive. PMO just gave us a crossover buy signal. Volume is certainly coming in. I would have liked to seen price move a bit higher off of this kind of volume move. That sets up a reverse divergence, which isn't, the best. But you can see stochastics are just getting above 80, which is what you want to see. And as far as the relative strength goes, you have the group itself is really performing about in line with the S&P, although just recently, today it looks like we saw some problems with food retailers. But overall, when you look at Albertsons, you have a nice outperformance against its group, which you better have considering the group is starting to suffer. But most importantly, it's showing strength against the S&P benchmark. So I like the way this is broken out after this big gap down low, or it wasn't actually a gap down, but definitely a sell-off. And now we've got that breakout. You can also see that 5-day EMA crossing above the 20-day EMA. We don't talk about our short-term trend model much, but that is a short-term trend model buy signal when you do see those positive crossovers. And then finally, the other one that I'm looking at is NREF. All right. Kind of a similar situation, big drop and managing to break out of a kind of a trading range here, if you don't count that part. But we're getting that breakout. It didn't actually close above the 50-day EMA, which is probably one of the negatives on this chart for me, but the RSI has just moved positive. We just got that crossover buy signal on the PMO, stochastics rising nicely above 80. And then again, you can see that the group itself is really performing in line with the S&P, which can be good or bad right now when the market's weak. But mainly we want to see that outperformance of the group and the outperformance against the S&P. And that we do have. So I like that setup. We have a few more minutes. So I thought I would take everybody over to our website to talk about our subscriptions just a little bit. Our holiday special is over right now, but we do still run a trial. If you use the coupon code DP trial with the number 2, that will get you a 2-week free trial to try out both of our products. You'll need to subscribe to the bundle and you can check us out and see what you think. But on our blogs and links page, you can see we have all of our member material. Periodically, we do have free material that comes out. And then of course, we have our chart list for all of our members, and people talk to us about our about the sector under the hood charts. We do have our chart lists there where you can get the sectors under the hood. It's a very nice look. You can see all of the information you need underneath these sectors, and that of course is also available to our subscribers. So it's a new year. It's going to be probably a rough 2022, and we are here for you at DecisionPoint.com to help you through some of the issues that might be coming up. And I agree, Dad. I mean, there certainly are, indications that this might be a good place for a bounce. I don't know. I mean, I'm still concerned that we still are going to have to come down a little bit further, but it's always good to see those hammer-like candlesticks. They tend to come in at bottoms, and we have a hammer-like candlestick today. So I think that's looking pretty good moving forward. But yeah, I run these scans every day for diamonds. I only publish Tuesday through Thursday, but I run the scans all the time. And so when I start seeing fewer results coming up on those scans, that tells me that, that it's probably not a good time to be in the market. And honestly, when you look at the participation right now beneath the surface, it's getting harder and harder to find winners as well when you have shrinking participation. And seeing all of those S&P 10 stocks, either correcting or pulling back or in a bear market, it's going to be a rough one moving forward, and it's going to get harder and harder for selections. So that's why I'm not that exposed to the market right now. Any parting words?
No, it can turn on a dime.
Yes.
People can, the herd can move and change directions so quickly.
All right, that does it for us. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.